I don't like when people make blanket statements to say, hey, if you do this, it's a dumb decision, or if you do this, it's a scam, or something like that. You can even modify the contract to raise the purchase price. Let's say you're buying a house at $400,000. The appraisal comes back. The highest offer is not always the offer that gets accepted on a home. The best way to use other people's money on a VA loan on this episode of Major Money Matters. All right, welcome back to another episode of Major Money Matters. Major and Marion here. And brother, welcome back to the party.
Hey, thanks for having me. I mean, we've been having these conversations and apparently people are listening because we're getting questions about videos and the things that we say in videos. And people want to know, like, hey, is this really true? Or the things, we have not heard mortgages talked about like this before. And, these things, we hear all these things on the internet. Is this really true or not, Yeah,
I find it interesting because many of our questions come from realtors, because realtors aren't taught much about mortgages as they're getting a real estate license. And they definitely aren't taught much about VA loans as they're getting a real estate license, because some of them will link, VA loans in with FHA loans and USDA loans, and all of these stuffs are kind of wrapped up into one. And from an origination standpoint, that could not be further from the truth.
True indeed, and a lot of it is, hey, I heard this, I heard that. Well, when I did my last transactions, we couldn't do that particular thing. Well, do you remember what type of loan it was?
Yeah.
Do you remember, of course they would know what state they were in, but the state that you're in has something to do with it. Where you do a loan has a ton to do with what you're going to be able to do.
Every deal is different. And right now, as of the recording of this video, it is fall of 2020, summer of 2025, trending into fall of 2025. We find ourselves in a buyer's market where buyers have a lot of leverage. Sellers have less leverage depending on the market. But on a national, stage, we're kind of in a buyer's market where buyers kind of have the power. And, the thing that people often ask us when we're doing VA loans, because they're getting seller concessions, I don't want to get too deep into this yet, but seller concessions on a VA loan, everything is not classified as a seller concession, although you may be getting money from the seller. So from origination standpoint. So what I wanted to do, brother, is talk about how to use other people's money, in this case, the seller, or it could be the builder, in order to get the best benefit for the veteran. So let's talk through some of these things and talk about, first of all, let's start this off. This is what we do. This is our interpretation of the VA loan. This is what some of the investors that we work with, this is how we structure the VA loan. And if you hear us say something and you then send your next VA loan to your favorite lender who, gives you whatever benefit or whatever, whatever relationship y'all have, and they say, hey, you can't do this, or we can't do this, or my underwriter won't allow us to do this, that doesn't mean we lied. That means you sent your VA loan to the wrong person.
But Major, I sent the deal over last month. I sent the deal over to Navy Federal, and they said I couldn't do that.
Well, that's on you. That's your.
But Major, this buyer right here, he's at Veterans United, and Veterans United said they won't allow this.
They ain't gonna undo it, man. So that's on you. That's your inability to work with the right lender. And that's your bad choice. And if you're a veteran and if you're a service member and you send your loan to the wrong people to do the wrong things, and you're like, well, the VA guidelines said I can do this. Doesn't matter, because every bank has overlays. And I'm not going to get into that. But on another video where we talk about lender overlays on our channel, you can take a look at that and dig through what overlays are. But every underwriter is going to be slightly different on how they interpret the guidelines. Even us who work with 140 different lenders on VA loans, we're probably working about with 15 to 20 of those lenders on VA loans. Each one of the underwriters at those lenders or at those investors interpret VA loans a little bit differently. So we have to know how to structure this, and whether that investor allows us to do it just like you can be putting yourself at risk if you send your loan to the wrong person. So let's dig through these, brother, and start talking through some of these things, because this is going to be a good one. And I think veterans and realtors are going to learn a lot by this conversation.
I believe so too. And Major, before we get started, what's the guiding factor, the regulation, okay, the baseline for everything we do? What is it?
Absolutely. You got to look the 26-7. You know, when me and my wife got married, we had to establish a baseline. Like, if we disagree on something, what is our guiding principle to figure out who's right and who's wrong? We decided that was the Bible. If the Bible says we are to treat treating one another a certain way, and and we're not treating one another a certain way, or we're not considering something and we disagree, then we have to go back to the Bible to say, okay, what does the Bible say? That's the way it is in our marriage. Okay, what does the word say? Okay, and then how do we go from there? Now, the next level, and for us doing VA loans, that's the 26-7. Okay, mm-hmm. The VA lending handbook, that is the VA lending Bible. Okay, now the next level and more complex is, how do we apply what the word says to this situation? And for us as originators, that's being a practitioner of the VA loan, someone that's actively engaged, because I can read something in the Bible and interpret it different than somebody else, just like somebody can read something in the VA lending handbook and interpret it differently than somebody else. So we have to be practitioners, actively engaged in figuring out what this document says.
Would I be a good practitioner if I only did one VA loan over a 12-month period, 2 VA loans?
Well, I have to ask you the question. If you got to have open heart surgery and your doctor only did 1 open heart surgery or 2 open heart surgeries in a year, how confident are you going to be about that doctor doing open heart surgery? It could work out fine. Okay, it could work. However, I can't think of anything that I've done 1 or 2 times, and I'm actually good. I went ice skating at the Poconos one time, and I'll tell you, 270 on ice skates. I mean, somebody might do well at it, but that's not me. That's not me. All right, let's get into this, brother, and talk about these things.
All right, we'll breeze through these. Okay. So first of all, I've heard in other places, or I just know it as a realtor. I just know that the VA only allows 4% seller concessions.
Well, the VA does allow 4% seller concessions, but then you have to ask yourself the question, what is a concession? Now, on an FHA conventional USDA loan, any money from the seller is considered a concession. However, the VA guidelines doesn't consider all money coming from the seller to necessarily be a concession. So it is possible for you to get 4% in concessions from the seller, 4%, and money to buy down the rate, okay, and all closing costs paid, okay, because technically the VA guidelines in the 26-7 states that buying down of the interest rate for the normal market, normally underwriters can consider that 2 points, but every underwriter is different. So normally they're going to say, hey, you can buy down the rate by 2 points, and you can pay all closing costs, and you can get 4%. Now, the question of what you do with that other 4%, that's another thing we're going to get in that a little bit. But you can actually get significantly more than 4%. Say, brother, we just closed a family on, was it 2 months ago? This is now August. So that was in June, where we got 9.5% from the seller. And we were able to, and in fact, last week, it was a home, the home was $540,000. And then the buyer got $43,000 from the builder. Yeah, so let's do real numbers here. So right now, average interest rates are somewhere in the mid-6s, okay, on VA loans without buying any points, okay? Average interest rates nationally. Everybody's situation differently. That's not a rate quote. I'm just telling you what the rates are nationally right now as of today. Interest rates change daily, up to multiple times within a day. Okay, disclaimers here. They took the builder's money. They bought down the rate permanently to 4.99. Okay. And they did a 2-1 buy down from the 4.99. So they got a 2.99 rate the first year, 3.99 the second year, 4.99 the third year through, 3 through 30, the third year. So you can take money and apply it in multiple different ways. And we had an investor that allowed us to do that. So, that's why I say everything's different, right?
Hey, I'm sorry if you see me getting a little emotional, but
it's beautiful. It's beautiful.
It's a beautiful thing when you can just structure a deal and save the veteran so much money for the long term of the loan.
Absolutely.
Not just an upfront incentive.
Yes.
But I'm talking about for the next 30 years of that veteran's life. That veteran is going to have disposable income that is created, that will allow to be created from this transaction, because they didn't have to tie up their dollars into their home.
And that one of that family was like, "Hey, Major, when can we refinance?" And I'm like, "Bruh,
don't look the gift horse in the mouth. We don't want to say never, but never."
The likelihood of that happening is extremely, extremely low. You refinance from 4.99, you're in a pretty good spot there, brother. Okay.
All right. We're gonna start cooking on these. Okay.
Okay. Good to go.
Okay. So give me the seller concessions versus closing costs. What's the differentiating factor there?
The 26-7 actually lists things that are considered seller concessions for a VA loan. Okay. And it lists them out, things that they consider seller concessions on a VA loan. Okay. Keep in mind, realtors, you have to actually, consider, I'm not saying you have to know, we have to consider that how you use the money from the seller is so important from the originator standpoint. How the originator structured, how the veteran wants the deal structured is so important. Temporary rate buy downs, that's a seller concession. Paying off debt, that's a seller concession. And this is listed in the 26-7. Now, paying closing costs is not a seller concession. Okay. That is not a seller concession. So buying down the rate, a permanent buy down and a temporary rate buy down, one is a seller concession and one is not a seller concession. Okay. So this can be very complex. And let me tell you, let me make it simpler for realtors. Okay. I'm going to make this incredibly simple for realtors.
Cheat code. Here we go.
Here we go. If you're doing a VA loan, okay, get all the money you can all the money you get. Okay. Let the originator figure out how to structure it. Okay. Do not get into this situation where you're like, well, are we going to do this? Are we going to do this? No, don't. That is not your lane. Okay. Get on your side of the road, get as much money as you can. And then the originator will work with the buyer to figure out what is best for the buyer. Okay. So that's my perspective on that. And when you start working, hey, can we go 4? What if we do 5.5? We can do this. We can do 5.5. And sometimes I love realtors. Okay. I sometimes get on a realtor's nerves. Sometimes they get on my nerves because we just need everybody to stay in their lane. Okay. So don't worry when you're doing VA loans, don't worry about going over. We don't want to end up with too much money and all of this stuff. And no, if you're working with us, get all the money you can, and we will figure out how to make it work for the buyer. Okay. We are not giving anything back to the seller. We will make sure we use every dime of that money.
Next up. So can the seller pay all of my closing costs with no percentage limit?
Yes. Yeah, absolutely. They can pay all of your closing costs. Okay. Now, again, remember, I told you this is what we do. Okay. Not what everybody else does, but yes, they can pay all of your closing costs. In fact, it is possible that they pay all of your closing costs and you get your earnest money back at the end of the transaction.
Wow. Plain and simple, cut and dry. Can the seller pay my VA funding fee?
Yes, they can. Now you have to be careful because some underwriters are going to say that it's all or nothing. So some underwriters will not allow you to pay partial funding fee or apply the seller concessions to the funding fee. The other question that we have to ask is it a good use of funds to use the seller concessions to pay the funding fee? because normally the funding fee is financed into the loan. Okay, so it's not money out of pocket anyway. So if I have seller concessions, and I know I'm getting ahead of you a little bit, Marion, because I know you're going to get to this question. If I have money left over, do I want to apply it to the funding fee, or should I be using that money to pay off my debt or something like that? So, in my opinion, using the seller concessions to pay all a part of the funding fee is probably one of the least efficient uses of the seller concession or money from the seller.
But it can be done.
It can be done. I mean, you're a buyer. We structure your loan the way you want to do it. So if you don't want to finance that funding fee into your loan, then yes, you can do that. You can pay the funding fee.
Okay, so you said you're going to get into it. Let's get into it. Can I use the seller concession to pay off the veteran's debt?
The answer to that question is yes. And we've had many veterans who have bought a house, got their closing costs paid, got a rate buy down, and paid off their debt. I had a buyer a couple of months ago who bought a house and got their car paid off, in the same transaction. Also, the seller can pay off debts in order for the buyer to qualify. Okay. Let's say that the buyer has $5,000 of back child support. Okay. Now, you are not going to close on your VA loan with back child support unless you have a payment plan in place. Might be able to work around that. But if you're sitting with back child support, that's going to be a hurdle to get over when you're using your VA loan. Now, you can structure the VA loan. You can structure the loan where the seller gives the buyer whatever money in order to, pay off this debt. You can structure the loan where the seller gives the buyer money to, pay off a debt and reduce their debt to income ratio so that they qualify. So you can do multiple different things. I'm going to say this, okay? You can even, if the appraisal comes back higher, you can even modify the contract to raise the purchase price. Let's say you're buying a house at $400,000. The appraisal comes back at 407 and you qualify at 407, okay? You can raise the purchase price to 407 and ask for $7,000 back to the buyer after the appraisal comes in. Now, you never want to go into a transaction with the appraisal being the only way that you actually make it through that transaction. But it is possible for you to do that and get the money to pay off debts or something like that. So that is a benefit to the VA loan that is not a benefit on any other loan. So the seller can't pay off your debts on an FHA loan, conventional loan, something like that. That money has to come from you, but on a VA loan, that money can't come from the seller.
Yeah, I'd also like to add to that, brother, that waiting on an appraisal to be the glue that holds your transaction together is a recipe for disaster.
Yeah, there's going to be trouble.
The VA, by regulation, has 10 business days to return an appraisal to us once it has been ordered. So everybody in this transaction is waiting for 10 business days in order to see if this is a real deal or not. And that is torture. And it's just not a good way to do business at all.
Yeah, the only way that I would perhaps, do that is if you have someone who's buying a home that they currently live in, or, if they're buying from a family member or something like that. That's the only way that, I would perhaps do that. But otherwise, I wouldn't go into a transaction with that being the only way we make it through the transaction.
All right. Can a seller concession be used to prepay property taxes and insurance?
Absolutely. It can be used to prepay property taxes and insurance because, as a part of your closing cost, there are prepayments on property taxes and insurance, starting up of that escrow account. So the seller's money can be used towards that also. So it reduces your overall closing cost. Okay. So that's an option also. The other thing that I will tell you is you can also use the seller concessions to prepay HOA fees. Okay. Maybe you have money left over and you say, hey, I don't want to pay HOA fees for the first 6 months in my home. Now, HOA fees vary in cost. Now, some HOA fees are $20, $50 a month. Some HOA fees, believe it or not, are $1,000, $1,200, $1,500 per month. in some of the markets that we work in. But you can use the seller concessions to say, hey, I don't want to pay my HOA fees for 6 months, so I'm going to take the seller concessions and apply it towards the HOA fees and pay my HOA fees in advance.
And since we're already on HOAs, why don't we talk about home warranties as well? I'll just throw that caveat in there, that the seller concession can also be used to pay for that home warranty.
Absolutely. You can do that also. What's the next one?
Okay, let's talk about temporary interest rate buy downs. And you touched on it a little bit earlier, but using a seller concession for temporary interest rate buy downs or even permanent interest rate buy downs.
Yeah, so keep in mind, temporary interest rate buy downs are categorized as a concession, and those are limited to 4%. However, there are some underwriters and some lenders or investors that will allow you to go over 4% on those temporary rate buy downs on the concessions. So their interpretations of the guidelines are different, and there are some exceptions to the VA guidelines that the lender allows the veteran to make. So a permanent rate buy down is simply buying points. Okay, you can buy down your rate and use money from the seller to do that. A temporary rate buy down is not an adjustable rate mortgage. It is a predicted, decided increase. And the way a temporary rate buy down really works is, you have, let's say your monthly payment at 5.5% is X, and the monthly payment at 4.5% is Y. There's a difference between the interest payment between those two things every single month. So you take that difference, multiply it times 12, and then that is the amount of concessions that you're going to get from the seller for them to basically cover the delta between 5.5 and 4.5 for the first 12 months of payments. And I know that that's about 0.8%. So that's how that usually works. But you can use the seller's money to do that if you're somebody who wants to get some reprieve from higher interest rates or something like that, and temporarily pay a lower monthly payment. I do warn any veteran that if you're doing a temporary rate buy down, that you should plan, and most people will go into a temporary rate buy down expecting to refinance, or sometimes people do it expecting a job or pay a job increase or something like that. They know maybe I had a client one time that did a temporary rate buy down because they knew their spouse was going to get a job or going back to work in 6 months. So they said, hey, if we can get that for a year, that'll help us out. I don't like when people make blanket statements to say, hey, if you do this, it's a dumb decision, or if you do this, it's a scam or something like that. Every buyer is different, and everybody's life situation is different. We just give you the options to structure your loan. You can structure your loan however you want to do it.
Yeah, there are cases where we say, hey, that's not a good option. Okay.
Yeah.
Or that's a great option. But the bottom line is you have options. And
That's right.
And I'm not here to choose for you the option that best fits your situation. We can talk about the pros and cons of these options and figure out together which option is best for you. But my job here is to present you with options and keep the doors open to closing your transaction.
1000% correct. Yeah, we don't tell you what to do. You're an adult. We give you what your options are. That's a good summary there. What's our next one?
Okay, so we're going to cap it off with this one. All right. Hey, buyer's market or seller's market? Can I still ask for seller concessions no matter what the market is?
Let me tell you something. A lot of things goes back to being married. You can ask for whatever you want. Now, are you going to get it? Depends on the day. Depends on the day. Depends on the market.
I got something for that. Okay.
Remember, it's a public forum.
And I'm going to tie this back in. Okay.
Yeah,
because it goes back to being married. Like you said. All right. Which I am 11 years, on the clock. All right. Consecutive years of being married. Okay.
Consecutive years.
Also, realtors, it's in how you ask for that thing.
Yeah.
Okay. No matter what the market is, all right, no matter what the climate is, it's in how you ask for it. All right. So you can, number one, when you're dealing with veterans, tell the story.
Yeah.
Tell the veterans story,
Yeah.
okay? Especially when you're putting in an offer. And I just, for those of you who are watching this, we told, we're fall of almost fall, still summer of 2025. But I just wrote an ebook on how to attract and serve veteran buyers. Okay.
Yeah.
And then in one particular, and it's a field guide for realtors who are really trying to excel in this space. And we'll provide access to it, but tell the story when making your offer. And I touch on this in that ebook, pamphlet, guide, whatever we are calling it right now. But tell that veteran story. Tell the story of how they have served their country, how that seller's house is going to be the completing piece in this veteran's journey to owning a piece of the country that they have spent their life, limb, mental sanity, marital strain, being away from their family. That seller's home is going to be the completing piece to this veteran's life and to that veteran's family's life. So I'll tie this back in. It is how you ask for seller concessions, how you ask for anything in the contract to make the deal work in order to serve the veteran.
And I'll say this from the perspective of the veteran, like, should you expect it? That becomes part of the market also. That's a market question also. Like, hey, should I expect, the buyer to pay my closing or seller to pay my closing costs or something like that? Should I expect it? It depends on the market. You can ask, like I said, ask for anything you want. The highest offer is not always the offer that gets accepted on a home. So you can ask for whatever you want, but in a buyer's market, usually you can get some seller concessions, if not all that you're looking for. In a seller's market, it becomes more challenging, but I'm not going to tell you it's not possible. So, there are other factors that go into seller concessions. How long's the property been on the market? What are the other things that you're leveraging? What are the other things that you're leveraging? If you're looking at like, hey, this house just fell out of escrow, so we're going to put in an offer. We're going to ask for this. We're going to, say we're going to close in 2 weeks. Putting in a fast closing in conjunction with with other things. If somebody's house been on the market for a while, and that person has to give up $10,000, but they've been on the market for 90 days and they're getting a little itchy, it might be beneficial for them to, close in, 8, 10, 12 days, which we can do. And get those seller concessions. So there are other trade-offs there that are relevant.
Yeah, we also a factor is going to be the amount of equity the seller has in that property.
Is there meat on the bone? Sometimes there just isn't meat on the bone. You're like, if a person can help it, they're not going to do a short sale or sell the house short of what they can pay off the mortgage with. So there's also that. You got to ask yourself the question, like, is it even money here that we actually can ask for seller concessions with?
So true. Like I said, we wanted to finish up on that one, but bruh, did you have any other thing that we didn't touch on that you wanted to maybe put a cap on it?
No, I think the important thing is, if you're a realtor, you need to be working with someone who understands this loan product so that you don't get messed over in the escrow process. So, understanding, number one, we're glad you tuned in for education and to understand, because we're kind of going deep into, we're doing a series of teachings here, brother. These are things that we go through in our training for realtors, everything realtors need to know about VA loans. And if you're in the Texas area, that's a CE accredited course that we do teach to realtors. But we're going deeper here and having these conversations so that you can practically apply these things. If you're a realtor and if you're a veteran, you need to understand, all of these things, because you need to understand what is possible to you. But I will tell you, everything that we say, it is a conglomerate, if you will, of the different investors that we work with. So I know, hey, if this veteran wants to do this, and when I say investors, go look at my video. I have a lot of videos on brokering loans. We're mortgage brokers. We don't work for a particular bank. So we have different investors that we work with in order to facilitate your loan. But understand that when we are putting a loan together, we have to know how that loan is going to be structured, because we know how each individual investor actually how they interpret the VA guidelines based on our experience with them. So, this is something that is very much important. But if you're a realtor and you say, well, I'm just going to do this, and this guy on a video said I can do X, Y, and Z, and I send this over to my favorite lender that has a in-house agreement, or I send them all of my leads and all of this stuff. That's not necessarily, you're not going to get the same result, maybe, because everybody's interpretation is not the same.
Absolutely. And I'll just talk about myself briefly. I've mentioned this before, but I just took a homeless veteran from a homeless shelter into being a homeowner. Shortly before that, I know you want to throw something on that. Yeah. Shortly before that, I put a veteran in the house who had a foreclosure in 2019 and 6 mortgage licks in 2024. Those are some things that if you went to any person that may have done 2 VA loans or does not have the strength of a team behind them, that they are going to say that can't be done. Okay.
Yeah, because that one of those was a VA manual underwriting. We probably should do a video on VA manual underwrites.
Absolutely.
Because not every lender does VA manual underwrites, and we need to educate the veteran about what's going to be expected on a VA manual underwrite. But on that one where the veteran was homeless that you did, that was a VA manual underwrite.
Correct.
And every underwriter's interpretation of the guidelines in a VA manual underwrite is going to be different. So, or what is required. And we were happy to work with a great, wholesale lender that we have that does a great job on VA manuals and doesn't make it difficult. Because this was very, very, it's a very intricate deal. We did it. I mean, you did a fantastic job with that. Seamlessly got the veteran through. But that required knowledge of the VA guidelines on that. So we're going to do another video on that, understanding VA manual underwrites. But just understand, from if you're a veteran, if you're a realtor, you can use a lot of the seller's money in order to do things like this. But you got to be working with a lender who actually knows the guidelines.
Absolutely. All right. Sign us out, bro.
All right, brother. Thanks for joining us. Great questions here, and I really appreciate it. Awesome. We'll see you next time on the next episode of Major Money Matters.